you would have expected to go. Somewhere around 84 to 81 was pretty much the lowest I ever expected treasuries. And if you'd asked me again where I thought it would stop, I would have said 88.90. But again, this is why you don't really predict. Instead, you say, okay, well, that's a possible zone for us to look at. And then you look for market structure. All right, let's move over to copper and take a look at this one. Even the Chinese stimulus packages haven't really moved copper too much. Again, Dr. Copper tells us a lot about the world. At the moment, we're in a demand zone and we've been in a downtrend. So we're looking for this to actually break through this trend line here. And if it does, that's actually a positive sign for bulls in the market. And I think things will be looking a little bit better on the markets themselves. Dow Jones Transportation Average Index is again starting to put in the bull moves here. It got above that 20 moving average. It's telling us that the market is meaning business here. It's saying, you know what, I think this is a bit more of a recovery. We've got home builders not quite through our alert level yet, but this is again saying this recovery could be real. And where do we find ourselves? Critical points. Why? Because it's ahead of inflation. And of course, inflation's coming out in less than 24 hours, plus the kickoff of earnings season. All of these levels are going to be super important for the next couple of months. Semiconductors still maintains in our golden pocket here, and you can see the supply is holding. It was a little bit stronger than I thought. We ended up getting that rally into short. And then you know what? There was just no sell-offs. There was no breaks of anything in the previous session. I saw a few people shorting some scalps and they got it right for part of the session. But by the end of the day, the market was obviously well back up. So they either got broken even or basically just got stopped out. Or maybe even got some profit if they took it early. But yeah, semiconductors sitting in this supply. So again, all heading into inflation numbers. Same thing with what we're seeing on the US dollar. The US dollar may have topped out. We've been talking about that. But have a look at this demand zone. Bam, straight into it, sitting here, waiting for more information. And again, we won't really make a prediction there. We'll see how the inflation number plays out. Let's go over to gold, and it hit our target. So for anyone that was bullish on gold, congrats. First supply hit, beautiful level. Actually saw a little bit of a rejection off here, but I haven't really seen enough to show us that we're going down just yet on gold or anything. And I think you won't probably get a read on this until after the inflation report. Some people will be looking around that 1867 and then saying, okay, well, if we go underneath 1867, I want to look for shorts into 1850 levels and the previous demand. That's valid, but we are at that key supply. So I think some people will say, well, time for me to take profit and then reassess. And we'll be reassessing gold very soon. Gold stocks, absolutely booming. Next target is, of course, 29.80 for gold stocks, and they're behind spot. So they could go up even if spot was just, up and down $10 for a little while. US oil, now it's dropped back down to a level that we thought it might, but at the same time, it didn't hit that supply that we were looking at trying to get a sell through. So will we see buyers in oil here? A lot of it's going to do with the CPI inflation number. I'm actually negative on oil, which I've spoken about many, many times, especially when we saw this. When we saw this, we basically went, okay, probably top of yields, because oil was predicting in this case, and it was basically front-running yields. So we saw that crash through oil. Then, of course, everything happened over the weekend, and then we saw that rally. But that's always going to be short-lived. And my expectation was about 89 for that, and then maybe we would sell off. And that's still live. It's possible that we find buyers here, we move up to 89, and then we see sells. But have a look at energy stocks. They were getting slaughtered. And this is exactly what I kind of think is going to be happening here. We're down 1.29. It was down a lot worse before. It's gapped up, then it's actually gapped down. So interesting point here for energy stocks. I'm not doing anything with them in particular, but some people are going to be trying to go short here. And actually, look, there are cases to be said that maybe buyers are going to try to buy in these zones. I'm not buying or selling for energy, but I do think that there's a better chance that energy stocks actually may have seen their peaking through the recent cycle, at least for now. Though, we'll see what happens with yields. Yields have a lot to do with this. Let's move over to Tesla. Tesla at this stage has held in its zone and nothing much to say. It's making a series of higher highs and higher lows. So basically it's up, 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 up. At this stage, if we get a turn, hey, we'll be the first to talk about it. Let's move over to AAPL. What's going on there? No break of the new high yet, but we're ahead of CPI inflation numbers. So, of course, we have to expect that this may break. And if it does, it's a very positive sign for the markets in the future. Again, when we see probably an inevitable pullback, that should be met by bull demand if that's what's going to happen. For bears, they need to take advantage of this market right now and sell it off very, very quickly. Disney's another one I want to bring up for a little while. It has hit, of course, that critical level that we talked about for ages. And it finally hit it a few weeks ago. And basically, we've seen some nice strength resurgence here. So we're looking for potentially Disney bottoming off here. And this is a very critical point. And you know what I saw the other day? I reckon it was peak fear. There were so many people going negative on Disney. And don't get me wrong, I haven't seen a Marvel film for probably about 4 years. And I don't even want to anymore. And I used to watch them all. But God, I'm so sick of them now. But it's like those old cowboy dramas, you know, the ones that were from like 70s and stuff that got saturated and then no one wanted to watch them anymore. I'm sure some people still do, but yeah, they were always in the dollar bin on VHS. Anyway, Disney over here, we have a big resistance, and this is a key level for us to break through if we're looking for positive price action. I think Disney's a case of putting our own opinions at the door. So even if you're negative or positive on the company, ultimately you just trade the price action. And it's really a good lesson, I think, for a lot of people. Another lesson would be utilities. Here is a market that you would not think would get destroyed like it did, but it did. And it put in some massive volumes the other day, which you can see down these lows. We've been positive on it the last maybe 4 or 5 sessions. And yeah, it's doing really well. It actually surpassed first TP. And I still think there's even more in it. You know, it's basically V-shaping from a brutal sell-off. And now it's squeezing a lot of those shorts back out. It's kind of similar to treasuries in some ways. RK, hypergrowth stocks, not a good session for them, but that's okay. Expected that this would happen. And we're kind of hoping for it to actually get down a little bit lower, maybe like a 39 or something. And then we'll see whether the buyers can recommit to it. But it seems like it may have put in a low. And it's certainly just showing you there's a lot of opportunity in this market. Even if the market runs off, yeah, the big tech stocks might go first, but there's going to be a lot of opportunity throughout so many subsectors. You've got potentially staples in the future, utilities, you've got gold. There's so much opportunity in these markets. Let's have a look at the Australian market now, and it looks pretty strong. Basically, it's broken through our little green box here, and it's kind of pointing towards, again, the market rebound or anything that kind of comes from a sell perspective being bought back up, and that's kind of a positive. When we move over to US 2000, we haven't got a break of 1810 yet. We're still on the 20 moving average, which is the key level ahead of CPI, and we obviously have the downward trend line. I really like this chart in terms of in the future when we get to these trend lines and these levels, but at the moment, hard to say too much. CQQQ doing well as well. Thank you to Chinese stimulus, and it's up another 1.19%. And again, they're just defending around this level, which we've speculated on before. It's basically back to that break-even zone where we started to first speculate on it. NASDAQ, 15,263, new high. So NASDAQ very strong, getting through the top of that supply. I don't know if I'm going to look at the NASDAQ here in terms of the chart to watch over the next 24 hours. I'm probably going to use the S&P 500, but it did manage to put a new high in. I'm going to go 15,114 as being a line and an alert I'm going to set over the next 24 hours to see whether the market's topped off. You can see there were some sellers here, and they've been squeezed out. So if the market wants to keep going up, it can do so. But if it's going to sell, I would be looking at market underneath here and then going for some weakness for now. Again, that's against the current trend, so you got to be careful there. S&P 500 inside day, as you can see, it didn't really do much. It sold most of the session, and then boom, boom. In the last two kind of candles here, we've got a little bit of strength. You can see the futures market is tipping over the top here. And just to go back, there is a gap fill at 44.02, which could be hit during the inflation number. So what if this happened? What if we went 44.02, sell off, and then started coming back down? Well, let's speculate on that. I talked to you in the private community about this, in the private trading community, and I said, that the problem was that we hadn't been able to make any lower lows. We're basically just making a series of higher highs and higher lows, and we've been doing that the whole time. So we've got the higher high, we've got the low now where we saw it got defended. So we'd have to actually kind of see that to really, maybe even have to take 2 days for us to actually see a proper turn towards the short. I'm sure some people will be sitting around 44.02 saying, I'm going to try shorting that. Yes, yes, yes. And you'll notice I have a green line around this zone as well. So between 44.02 and 44.10 will be kind of, I think, a critical bear zone for the next 24 hours. Good luck out there on that one. It is going to be a little bit tough to predict, but of course, this is what inflation numbers do. They often push in one direction and then reverse. The key will be whether the number is clean or not. If the number's super far off the 3.6 expectation, expect kind of a clean move. If the market's right on, expect the market to do some traps and all of that good stuff. Let's move over to crypto. Now, Bitcoin certainly looked weak for the first time in a while. It's been putting in a series of higher highs and higher lows and kind of like holding through. And then it broke our little trend line here and it's coming back down. Most trade level 28K. We obviously were looking for potentially a short that would come through at 29.5 to 30K. Well, it doesn't look like that may happen now. This is kind of weak. Another thing I want to see is I want to see Ethereum drop its low. So you'll see here Ethereum, no alert set for that. It didn't weaken anywhere near as much as Bitcoin yet. So yeah, I think, look, everyone's getting a little bit bullish on Bitcoin. I've said this for a while. I'm not really doing anything with it yet. I do have a bullish maintenance on next year, but yeah, I'd like to see it kind of wipe first. So we'll find out. I mean, kind of hard chart to read, really boring. I mean, if you were a crypto trader right now, you'd have to be in alts, and even then, yeah, I find it quite boring at the moment. But that's all right. We cover it, and we're going to get excited about it when it is time to get excited about it. Down here at 26K, I'm sure some buyers will be, but at this stage, it kind of looks weak after that trend line breakout. And yeah, I'd expect like maybe if we got like a pullback to these supplies and here small time frames, maybe we'd see shorts. All right, guys, that's the big stuff. Of course, news is coming up, and we know it is earnings and CPI. So be on top of the CPI report, 8:30 a.m., 1 hour before the market opens Thursday. Then we've got prelim UOM consumer sentiment, Friday, October 13th. And of course, the big earnings is just about to start kicking off. So stay on top of it all. Remember to subscribe and smash that like button if you want to follow along with us. And we'll be covering all of earnings season. Bye for now.